Hey there. So I wanted to go over a purchase contract. So once you get an offer on your home, this is going to be kind of what is going to happen next is you'll get an offer. I wanted to explain the boilerplate terms in the contract. Now, this is a video that is pre-made, so everything is going to be subject to what's in your current contract, but some things I wanted to point out and for you to be aware of. Okay, so I'm going to go ahead and screen share with you. So this is the standard purchase contract that you're going to get when you get an offer. This first page is going to be the disclosure regarding agency relationships, just letting you know that I have a fiduciary duty to you and the buyer's agent has a fiduciary duty to the buyer, the civil code behind it. There's also going to be the fair housing and discrimination advisory. This is letting you know that we cannot discriminate any offer based on sex, gender, religion, marital status. Back in the day, these buyers used to send the honeymoon letter or the letter that was the love letter. All the things about them and why they're a great buyer for your home. We actually cannot legally send those to you at this point with the new laws that have come in place. So those buyer love letters are no longer a thing because it does encourages discrimination. You pick an offer because you like one buyer better than the other, basically. Possible representation of more than one buyer or seller. This is letting you know that we could have multiple buyers for your home, not only multiple buyers for your home, multiple buyers within our brokerage, and not only multiple buyers within our brokerage, but also our team and ourselves could have multiple buyers for your home as well. If that happens, we'll have a conversation on how we're handling the negotiations. Typically, what happens on our team is I handle you, the seller, and then Zach handles the buyer. It's still agent to agent negotiation in that case, but you get the benefits of dual representation. I always joke and say that's when Zach and I fight the most and drink the most. There's nothing more fun than negotiating with your partner. Wire fraud advisory. This is so important. When it's time for you to receive your final closing numbers, your final closing figures, your money, make sure that you communicate with escrow what your account information is. Do not trust an email if they're asking for updated account information or anything done with money should be done over the phone, talking to the individual at escrow. You want to make sure that money goes into your bank account. Now, this is going to be the standard start to the purchase contract. Here, you're going to have the property address, the date, the agents in the transaction. Your purchase price is going to be here, how many days of escrow you're going to have, when the offer expires, good faith deposit, the deposit that's going to be held in escrow while in the transaction, and then their lending information, how much money they're putting down, what type of financing they're going to do. So when we get the offer, I'll explain all of this so it's easy for you to read, but just know those are where the most important pieces are for that. The next thing is on page number 2. If the buyer is asking for a credit of some sort, this is going to be listed here in this section. It's going to ask for any rate buy downs or credit for closing costs. That will be listed here. Now, this is going to be allocation of costs. This is going to be who's going to pay for what. Actually, I'm sorry, I jumped ahead of myself. This is going to be your contingency period. So your contingency periods, buyers are going to have the standard contingencies. They're going to have the verification of down payment within 3 days of acceptance. I actually personally require verification of down payment and a pre-approval letter upon acceptance. So that's something that if the buyer wrote this in their offer, we're going to counter and say, no, give me your pre-approval ASAP. They're going to have 5 days prior to the close of escrow to verify the property is in the same condition of when they purchased it. They're going to have their loan contingency depending on what they wrote on their contract. The standard is 17 days for that loan contingency, standard 17 days for inspection contingencies, standard 17 days to review all of the documents you provide to them, which is the disclosures. The disclosures I will generate and you will fill out. That's how the buyer will get those disclosures. The preliminary title report. Again, escrow and I will generate the title report. The buyer will have 17 days to review that. If there's an HOA at the property, the buyer will have 17 days to review all documents in HOA. Keep in mind, it's 17 days, but if they receive the disclosures on day 17, they still have 5 extra days to review those documents. We can't enforce the time periods if we deliver documents late. This is going to be important if they have to sell a home to purchase. Also, time and possession. When do you get the keys, right? Or when do you give the keys? That's going to be listed here. Time of possession. If it's seller occupied or vacant. And then you're going to have delivery of documents. Us as the seller, we're going to have 7 days to provide those disclosures and documents. We want to get the escrow instructions signed and returned within a timely manner. So we'll have 5 days upon receiving them to do that. 3 days to pay for HOA fees for transferring or any required document or HOA items. Again, we'll coordinate that with you with escrow. There's not anything special you have to do, just stuff you have to be aware of. We have 7 days within acceptance to install smoke detectors and fire alarms. So this is all the contingency periods. This is the timelines. When we accept an offer, I'm going to email you a list of your timelines where it's super simple. But if you wanted to reference the contract, you could do that. Page 3 is going to go over all the items that are included in this sale. So anything that's checkbox here that they mark off, let's say they say potted trees. If you don't want to leave your potted trees, we need to counter that in a counter offer. Remember, this is the original offer. It doesn't mean it's the things we have to agree upon. It's what we can counter as well. So this is anything they're asking for. And sometimes you'll see things that they don't want included, above ground spas in some case. Some buyers don't like the above ground spas, so they'll ask to exclude that. That means the seller's responsibility to remove that item, whichever it may be. All right, here we are with allocation of cost. Allocation of cost are going to be who's paying for what. Now, these are all boilerplate standard fees that a seller is going to pay. So that's why you'll see the contract I have here. It's already pre-filled out because this is what is expected a seller will pay. So seller's going to pay the natural hazard zone disclosure report. Don't worry, I'll generate it for you. You guys pay for it. It's about $125. You are going to make sure there's smoke detectors and carbon monoxide detectors at the property. If there's any government reports required. Here in the city of Santa Clarita, we don't have any additional reports. Down in the valley, certain areas of Ventura, there's what's called retrofit, and you must do the retrofit requirements. And that can vary anywhere from $100 to a couple $1,000, depending on what needs to be done. But here in Santa Clarita, Acton, Agua Dulce, we don't have those retrofit requirements. You'll see here an escrow fee, escrow, each to pay their own. The buyer will have their own fees and you, the seller, will have your own fees. If the buyer's asking for a credit for their escrow fees, it's simply a credit to their closing costs, but they still are charged their own fees. Owner's title insurance policy will be paid for by the seller. County transfer tax will be paid for by the seller. City transfer tax, again, we don't have that here in the city of Santa Clarita, but in other cities, there will be a city transfer tax. So depending on where you're at and watching this video. HOA transfer fees, that's going to be paid for by the seller. Traditionally, HOA prep fees are going to be paid for by the seller. The HOA certificate will be paid for by the buyer. To get that certificate from HOA, which will be required for their loan documents or for their loan, that's a buyer expense. If there's private transfer fees on the property, some builders have a private transfer fee. In most cases, there isn't one, but if there is, that will be negotiated who will pay it, buyer or seller. Traditionally, we see the seller pay for that. 1-year home warranty protection plan. Traditionally, again, a buyer is going to request that from the seller and the seller is going to pay for that. Depending on what features and amenities you have in your home will depend on how much it will cost. Average going rate right now is about $825. So all of these fees, these allocation of costs, are going to be about 1.5% of your purchase price or sales price. So 1.5% will make up of these costs. They are very boilerplate unless we negotiate the buyer to pay some of them, which means that we have multiple offers and it's a crazy hot bidding war. Maybe we won't have to pay all of those fees. Now, you have 1.5% for closing costs and then also the commissions that we negotiated. So you're paying the buyer's agent and the seller's agent, me, commissions plus 1.5% for closing costs. These are going to be any additional addendums that will be sent with the offer. A lot of times we don't have additional addendums. Maybe we will have one if it's a septic or a well property with well inspections and septic inspections. Talks about deposit. your initial deposit is the good faith deposit that's held within escrow. That deposit doesn't go to you guys upon cancellation, depending on where we are with contingencies, depending on what's going on in the transaction, will depend on whether or not you get to keep that deposit. So it's not an automatic release to you guys. This is going to be talking about the loans, what the buyers can and can't do. A buyer issues the pre-approval letter, but if they decide to shop another lender or go with another lender, they do have that right to do so. We just have to make sure that they can't delay timelines because of changing lenders or anything like that. Verification of cost, verification of loan application. It's going to talk about occupancy and possession. Remember, depending on what's negotiated in your contract will depend on when you're giving keys. Are you giving keys upon recording and closing? Are you giving keys at 6 p.m. the day you close? So we need to talk about what is that possession time period. If you're remaining in possession, again, there's going to be a form called seller in possession or an SIP. We're going to look at those terms in that document to understand exactly when you're giving the keys and what are your rights and what are you paying for in that time you're in possession. Contingencies. Keep in mind, contingencies are not an automatic lift. If it's a 17-day loan contingency and a 17-day appraisal contingency, it doesn't mean it goes away after 17 days. The buyer has to physically remove their contingencies in writing for that contingency to go away. I'll be there. I'll be hounding that lender, hounding that agent, making sure we get that contingency removal. So when you get your timelines, just know contractually we have to have those contingencies removed in writing. It's going to talk about appraisal contingency here. Review of seller documents. This is so important. We want to make sure that we are operating in a time is of the essence manner. When we're filling out documents or providing information to the buyer, they will have 5 additional days to review those documents. If we take too long to get them anything, then they can extend their contingency period. So that's really important. If it's an HOA or condominium community, you are required to pay an HOA transfer fee and an upfront HOA doc prep fee. So with these homeowners associations, these fees vary. Escrow will call you and ask you to go online and pay directly to the management company to generate the HOA documents. The longer this takes, the longer it takes for HOA to send us what we need to close the escrow. So let's say HOA docs don't get ordered until day 6 in escrow. It might take 21 days to receive those documents. On day 27, the buyer reviews something with the HOA and they're not happy with it and decide to back out. The buyer has the right to do so because we did not get HOA documents until so late in escrow. So just keep in mind when escrow calls for that HOA payment, time is of the essence. Items included and excluded. Pay attention to this one very closely. Page 6 of the purchase contract. It's going to have this whole boilerplate area. This is what is included with the home. Also on that page 3, what was checked box. So per the law, this is what you're supposed to be keeping at the property regardless of what they asked for on page 3. So please pay attention to this. This is going to go over curtain rods, curtains, security cameras, above barbecues, built-in barbecues. All of that is listed here. Make sure to watch what you're leaving and not, because that's how a buyer will end up suing you, is for taking something you did not know you couldn't take. Items excluded from the sale. If you're asked to remove something, pay attention to this because they're going to want you to take out anything that you're removing. You must patch those holes, and you can't just leave the house in disrepair because you removed a TV mount. If you remove a TV mount, then you've got to patch those holes and make sure that the property looks fresh and clean. Inspection, test, anything like that. Any buyer inspections a buyer's going to pay for. The appraisal, the buyer's going to pay for. So all of those items are paid for by the buyer. Anything you're paying for as the seller, you are going to pay for that through escrow. So HOA transfer fees are the only one that you have to pay up front. HOA doc prep fees, let me correct myself, are paid up front to HOA, but then you have your HOA transfer fees that are paid through escrow. Natural hazard zone disclosures, title, escrow, commissions, all of that is paid through escrow to the vendors that request payout. It's going to talk about different disclosures, tax withholdings. We highly suggest talking to a CPA, especially if you're going to be in a capital gains scenario. HOA documents. Some of this contract is generated for more of the buyer to be aware of certain items, but also it's good for you to know. Also, solar. If you have solar, please help me contact the solar company as soon as possible. Escrow is going to work with you closely to transfer that solar if there's a solar transfer happening, depending on if it's leased or purchased. But I need solar information like day one, like negative day one, as soon as possible to make sure that that happens smoothly. Solar companies are a third-party company. They don't care when you're closing escrow. They don't care when the buyer's contingencies are. They don't care. So they don't work in a time is of the essence manner. That's where we have to be very on top of it to make sure that we don't delay anything due to solar. Buyer's investigations, when they're at the property, they're looking for pests, they're running systems, they're turning on lights, they're running your air conditioning, your heater, they are touching and poking everything. That is the buyer's right. They are able to investigate anything that they want to make sure the property's fit for them. Title investing, more for the buyer, how they're going to take title to the property. This talks about time periods and removal of contingencies, which I discussed a little bit earlier about how that is done in writing. Delivery of documents, the buyer review of documents. We talked about this. The buyer has a certain amount of time to review documents after received. Your right to cancel. If the buyer is not performing and the buyer's not doing what they say they're going to do, we can issue a 48-hour notice to perform. The buyer's given 2 days to perform on whatever the task may be, and if they don't, we have the right to cancel. We can't just cancel because we feel they might be up to something. We have to give them a fair chance. They have to be past contingency periods for that task, and we have to give them 2 days to perform, and if they can't, then we can cancel. As a seller, if you have no contingency upon finding home of choice, you as a seller cannot cancel unless the buyer does not perform. So if you're buying a replacement home and you've put that contingency into the counteroffer, this does not apply. But if you are not contingent upon finding home of choice, you cannot cancel for any reason. It doesn't matter if it's death, divorce, or sickness. You still, under the scope of the law, are required to sell your home. So just keep in mind with that, if you're signing this contract, you are committing yourself and selling your home. No ifs, ands, or buts. So make sure you don't change your mind. No cold feet. This continues with final verification of property condition. This just lets you know, again, 5 days prior to closing, the buyer is going to walk through the home to make sure nothing has changed. They'll also verify if there was a request for repairs, any repairs that have been made. You have until the final walkthrough to complete the repairs you've negotiated. So if you're going to do repairs, you have until then. That's going to talk about the repairs and request for repairs there. It's going to talk about prorations and property taxes, how that works, compensation, how we get paid. We get paid through escrow. As a listing agent, your agent, we've negotiated compensation. It's going to talk about escrow instructions. Remember, escrow is a mutual third party. They are somebody there to not negotiate on anyone's behalf. They're just there to hold money, hold paperwork, and make sure everything is handled correctly as a mutual third party. And most likely we're using Brenda LaCour at Capstone. She's someone I trust. I've personally hired her to handle all of my escrows. She is the only person that I really, really like in Santa Clarita because she is on it for us. Talks about acceptance, MLS, going pending, service providers. With that being said, talking about escrow, we can't tell you who you have to use. We can't tell a buyer who they have to use. We can only make recommendations. It's going to talk about definitions of the contract, terms of the offer, time is of the essence, which we talked about. Liquidated damages. This goes back to if the buyer cancels, let's say the day before closing for no reason and no fault of yours, that means we're entitled to 3% of the sales price as liquidated damages. Again, contingencies have to be removed in writing. We have to show that the buyer cost us money. What happened in the transaction that cost us money so we can receive that 3% of the purchase price. Let's say they cancel on day 20, contingencies were not removed in writing. They found something wrong with the home. They couldn't satisfy themselves after various inspections. They can cancel. Let's say they don't get their loan approval because something up with HOA. they can cancel. So just keep in mind, liquidated damages is not an automatic, we get them out of escrow, we get their money. There's a little bit of negotiation and fight that happens there. Arbitration is that we are going to go through a mediator or an arbitrator, not the traditional judicial system, that we will go through arbitration. These are optional initials here. You don't have to initial arbitration. If you prefer to go through the traditional judicial system, you don't have to initial it here. Expiration of the offer, back on that page 1 of the purchase contract, will tell you how good the offer is for it. Typically, it's 72 hours from when we receive it. So just be aware that the offer does expire, and then we can counter offer as well. And the counter offer, we can put an expiration on that as well. This is acceptance. Buyer's investigations. Again, the buyer has the right to investigate anything that they want. We cannot deny them of an inspection. Fair Appraisal Act addendum. This is something saying that the property is appraised by a mutual third party, somebody that is assigned by the lender, that is in no communication with the lender or the buyer about the value of the home other than issuing a report, and that they cannot sway the appraisal value based on religion, sex, gender, all that stuff. And then California Consumer Privacy Act, we are not going to sell your information to any third-party sites. Your information is kept private. I wanted to scroll back up here really quickly to this section that's really important. Page 2. Let's see. Informational access to the property right here. This is when we have to allow them to enter into the home. For the first 17 days, unless they've changed this number here, this day count, for the first 17 days, we cannot deny them access to the home. We must grant them access to do their investigations to the property. So just know, in those first 2.5 weeks, if the buyer wants to request to come into your home, we have to give them the right to request. Now, within reasonable notice and for reasonable reasons, they can't just ask to go in the home every single day at 12 o'clock just because. It has to be within reason. But that is where we're allowing the access to the property. So that's a purchase contract in a nutshell. It's a lot of information. I'm going to go through it with you on what you're signing because the terms will vary per contract, home, etc. So if you have any questions, let me know. I know I speak fast, but I wanted to get through it as much as possible without boring you. I look forward to helping you. I'm really excited for this home selling process. And if you have any questions, reach out anytime. Have a great day. Bye.